I think maybe the good place to start is just talking about Nvidia, and I think your take on how, what you thought of the quarter, and how it came in relative to your expectations and them up.
Yeah, look, Tom, I think that it was probably the most anticipated earnings that we've seen, I don't know, in a decade or ever, right? And in terms of watch parties and everything else. For Nvidia, just take out the noise in terms of numbers and in terms of what happens. Blackwell delays put to rest. Think about all the agita over the last few months on that. And that's similar to what we're seeing in our checks throughout Asia. Demand, we believe demand's outstripping supply 12, 15 to 1. And nothing we saw from numbers or metrics makes me think that that's dissipating. Now look, in terms of like whisper numbers for the quarter, 33 billion, 33 and a half. They got 32 and a half, slightly below whisper. Stock gets hit. We look, 2 billion beats, we believe are probably likely here, right? But they're not. There's no reason that Jensen and the team are going to guide to anything near that, especially in a Blackwell type quarter. And I think you walk away, the demand thesis is accelerating. Yields are improving. And ultimately, I think it sets up for actually the next leg of the story. Now, look, I get where like sell-up happens, investors be like, oh, is this it? Is this over? It's second inning in a 9-inning game in terms of overall AI, because it goes back, and this is the most important. If there's anything anyone takes away from this call, it's for every dollar spent on an Nvidia chip, the multiplier for the rest of tech is $8 to $10.
In the ever-dynamic world of the stock market, a recent investment maneuver by one of the greatest hedge fund managers ever has caught the attention of investors globally. Ken Griffin, the visionary behind Citadel Advisors, is known for making headlines with his strategic stock picks. This time, Griffin's substantial stake increases in Nvidia and Tesla are sparking conversations across boardrooms and dining tables alike. What's the rationale behind Griffin's bold moves, and should you be considering following his lead with these tech giants? The reasoning might not be as clear-cut as you think, but the implications for the AI and EV markets are undoubtedly significant. Stay with us as we delve deeper into why these moves could be game changers, not just for Citadel, but for the market at large. Welcome back, everyone, to Investocracy.
Nvidia results have crossed. We're going through them. Initial move is down about 4%. Paul, we heard earlier, maybe it was from you, that there would need to be a $2 billion revenue beat in order for this thing to move higher. How much, though, is it important to get the full context of these numbers, especially because there are all these concerns about incoming quarters? How big is the pipeline? If they say some positive things about that, that could have an impact on the continuing reaction.
Yeah, and you're exactly right. When I was talking about the guide, I was more of a short term, like in the next couple of days. But later on in the call, they usually guide for a quarter ahead.
We got the details ready. Got to stop you there, Paul. Yep. Christina Partsinevelos has the numbers. Christina.
Yeah, we're just getting the top and bottom lines right now. Numbers. We are getting EPS of 81 cents per share. That is higher than the 75 cents estimates on revenues of 35.08 or $35.1 billion, which is also higher. And I'm going to come back with more of the data center numbers and guidance in just a moment.
All right.
Back over to you guys.
Yeah, thank you, Christina. Paul, I'll let you finish.
Yeah, so I think, in the call, hopefully there'll be more clarity on looking ahead to next year. What's the Blackwell production going to be? We know demand is there. Whatever they can make, they'll will be bought. But it's a matter of production and how much they can get out the door. So that's more of a longer term. But for the short term, it's the revenues, and I think it was just slight of a $2 billion beat. So that that's. For what the stock has reported relative to expectations, that's not really that impressive compared to what they've done.
Griffin's decision to increase his stake in Nvidia and Tesla comes after a volatile journey with these stocks. With Nvidia ramping up its influence in the AI chip market, it seems Citadel's leader is betting on the future trajectory of AI technology. Having previously offloaded 24.6 million and 9.28 million shares in consecutive quarters, Griffin's Q3 reversal with the purchase of 4.7 million shares is a significant endorsement of Nvidia's ongoing dominance in AI computing. It's as if Griffin is doubling down on the next wave of technological transformation, reminiscent of investing in Google before search engines ruled the internet. Nvidia, beating forecasts for the 8th successive quarter, has cemented its position as a powerhouse with earnings advances and record outputs in data center revenues. As highlighted by Nvidia CEO Jensen Huang, the impending release of Blackwell GPUs marks a new epoch, harnessing AI's full potential in industrial settings. Speaking of a stock as influential as a Silicon Valley blockbuster, with each quarterly report, Nvidia sees itself riding an upward wave of success, a sentiment echoed in the subtle humor that even Alan Turing might have hesitated to forecast. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Yeah, and I know you said you were looking for a beat on the guide as well, and we're going to get that info from Christina Partsinevelos hopefully momentarily, but I got a sense from looking at it that this guide on the revenue side, on the top line, might not be quite as strong as some were hoping for. Patrick Moorhead filling in here. The data center revenue came in pretty darn strong here. Data center revenue, $30.8 billion. You mentioned that's really most of what you're concerned about here, right?
It is. It's the number that matters for investors, and it's where their stratospheric growth is coming from. And like I said, they came in and they beat, but narrower than they typically did. And now everything rides on this guide. And if there's any challenges with the guide, then there needs to be some explanation on the H series to the Blackwell series, and the market will react. I agree completely with the speakers talking about if they didn't beat by a mile, then the stock's going to go down, right? And that we saw very similar characteristics. There was a little bit of spooking on the Blackwell silicon issue, but once the market chewed through that and got through the call, everything went up and to the right.
Patrick, we've got more metrics to bring our viewers. Christina, what do you have for us in this report from NVIDIA?
Let's start with the guidance, because that's what everybody was looking for. Q4 revenue, $37.5 billion, higher than what the street was anticipating, but still lower than the whisper numbers that I was seeing, anywhere between $38.5 to $39 billion. The CFO also saying demand for the Hopper architecture is strong. Our H200 offering grew significantly in the quarter. Blackwell production shipments are scheduled, again, to begin in the fourth quarter of fiscal 2025 and will continue to ramp in fiscal 2026. So again, that was a lot of this was riding on the Blackwell shipments. A lot of people the street was anticipating shipments to really ramp up in the end of next year, their fiscal year. So that's exactly what she's reiterating. Again, Blackwell production shipments are scheduled to begin in the fourth quarter of fiscal 2025 and will continue to ramp in 2026. So you can see stock did drop initially, but still, almost 1% lower at the moment, slightly below the whisper number, but the guidance was a beat for NVIDIA in the January quarter.
Christina, thank you. Patrick, I know I just interrupted you. I'm going to go back to you to finish your thought and also react to some of the guidance numbers we got. We also got Q4 non-GAAP gross margin. It looks like 73.5%, which is basically in line, slightly better than street expectations as well. But the Blackwell shipment guidance, what do you make of that?
I mean, it's positive, but I also want to reinforce that it's small. The clear majority of what the company is shipping now and in the next quarter is Hopper. And you're going to see a gradual ramp from Hopper to Blackwell. And, the company had a couple things it needed to show. It needed to show that gross margins weren't impacted. Essentially, you have a different architecture that could have weighed on that. But then again, it could have been made up by market expansion, the entry into networking. What I'm seeing from my industry analyst perspective is all positive, all expected. Every hyperscaler that I talk to cannot get enough of these chips quickly enough. TSMC is sold out for the next year and a half. That gives pricing power to NVIDIA. I just don't see how they lose.
Shifting gears to Tesla, Griffin's purchasing spree, which saw Citadel's Tesla shares multiply fivefold, speaks volumes about his confidence in the EV market, despite prior fluctuating sentiments. Tesla's advancements in autonomous driving technology could reshape urban landscapes, akin to how the smartphone revolutionized communication. While the Q3 market saw Tesla's shares dip, experts predict model innovations like the robo-taxi will reignite investor fervor. The humor is not lost on stock enthusiasts who jest that investing in Tesla is like buying a seat to ride with Elon Musk's ambitions to Mars. Yet the real question remains, should average investors mirror Griffin's blitz? It's crucial to remember that personal investment goals shouldn't just shadow those of a multi-billion-dollar hedge fund manager. However, as data suggests, Nvidia's path to harnessing a $1 trillion opportunity in accelerated computing shows promising returns. Similarly, Tesla's foray into self-driving regulatory frameworks could yield groundbreaking returns for patient investors. Both stocks inhabit buoyant futures with just enough current dips to excite speculative buyers. Scaling laws play a pivotal role here, with some skeptics questioning AI's ceiling, while Griffin and Nvidia see new heights. Nvidia's revenue surge and projections affirm that, while growing pains exist, the AI industry's horizon reaches far beyond our visible limits. It's as if Griffin's strategic maneuvers are bringing Benjamin Franklin's timeless advice to life: an investment in knowledge pays the best interest. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The gross margin guide for the fiscal fourth quarter from Nvidia, 73.25 plus or minus 50 basis points. And sure, the top line guide is a modest beat, kind of in line, but I can't help but couple that with this snowflake report and the ambition behind it, right? Because all of that data flowing into the transformed data center is part of what ends up feeding AI. So that, in a way, is positive pipeline indication, demand indication for the likes of Nvidia, no?
I mean, obviously, directionally it is. I think it's kind of remarkable that we're slicing it so thin in terms of, what's been guided in a quarter that's, already a few weeks old, and just shows you again how the tight tolerances of how this stock has come into this number. I do find it interesting. Pretty minimal movements. The winners initially on the reflex are the sellers of all those juiced options that were implying an 8% move. That could change. No doubt on the call, there's going to be a lot of big picture bullishness. The mission is not yet complete. We're going up and away. But I do find it interesting that initial little sell-off attempt was bought. So a lot of jockeying and a lot of people really, it's the machines fighting each other over small increments of near-term guidance. I'm interested to see if you get it fleshed out in terms of, through next year and what they're seeing, so that somebody can make a more coherent fundamental case.
Okay, I want to get back to Christina Parts-Neveles for more from this report.
Yeah, the CFO commentary is on the website right now, and there's a line that really stood out. Both Hopper and Blackwell systems, those are their two iterations of the GPUs, have certain supply constraints, and the demand for Blackwell, that's the latest iteration, is expected to exceed supply for several quarters in fiscal 2026. So that's a warning right there that supply is still going to be constrained for several quarters. We still don't know if that's going to mean a push out or any delays, but to me that sounds like a warning, possibly too why you're seeing this movement downwards for the stock. Guys?
All right. Christina, thank you. And shares are down about 3% right now, but bouncing around, as you can see right there on your screen. Paul, I want to get your reaction to everything we've just heard in this report, including the fact that demand is outpacing supply. We knew that was a dynamic, and it sounds like it continues.
Yeah, I mean, it's pretty incredible that the company is raised guidance by, $500 million, and that's disappointing. But it just goes to show you how strong this stock has been. I mean, they've routinely raised guidance by closer to $2 billion or $1 billion or more. So this it's short. And I think to what Mike was saying earlier, maybe the reason the stock isn't down more on that marginal, revenue guide higher is the fact that it hasn't done anything in 5 months. It's basically right where it was 5 months ago. So it has had some time to, rest, so to speak, and, let the market catch up with it.
Summing up, Ken Griffin's significant decision to bolster Citadel's investment in Nvidia and Tesla is more than just a financial move. It's a testament to the potential embedded within AI and EV markets today. Nvidia's ability to crush forecasts consistently and Tesla's innovation in the field of autonomous driving undoubtedly position these companies as frontrunners in their respective domains. The current valuations might not mirror the dips seen in Q3, but the long-term growth trajectories are alluring, especially for those willing to endure the market's roller coaster nature. As forecasts for Nvidia predict heightened AI adoption and Tesla's roadmap towards autonomous vehicles, both tech giants stand ready to lead investors into the upcoming industrial revolution. Should you consider investing? If future forecasts entice you and align with your risk appetite, Griffin's cues might be worth following. Now, as you ponder the exhilarating possibilities these stocks hold, we'd love to hear from you. What are your thoughts on Griffin's latest investments, and where do you stand on Nvidia and Tesla's future potential? Join the conversation and share your insights. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.